Hey everybody, Steve here. I'm just wanted to give you the investor slide deck for an opportunity to invest in Ankerstar Wealth itself. So normally we do investments and all kinds of other things. Well, you do have the opportunity. I created shares of Ankerstar Wealth a couple years ago. I did one initial round of raising some money, sold some shares to folks, and then now I'm kind of with round two, probably the final round. I don't know, but I had a pool of shares set aside just for this very purpose. Um, but it's an opportunity to invest in a company that's still growing. We've been at this 10 years. We've been growing 30 to 50% year over year since we started. Went from just me and an idea to now up to 10 employees, and our building's, coming up soon. If you invest in Ankerstar Wealth, you also get an equal share of the building. I will talk about that within a presentation. But yeah, it's an opportunity to, if you are an existing shareholder, you can plus up any amount of shares you want. If you're an employee, you can plus up any amount of shares you want. If you are new, though, it's going to be about $53,000 to come on board as a new investor. So just shy of that, 52,925, I believe. So yeah, so it's not for everybody, right? You have to have the funds to be able to participate in something like this. But why? Why would I offer shares up in my business? Well, you either I started and it was either it's just going to be me and service a handful of clients and call it good, or if I'm going to grow out the business, which I have, then it takes capital to do so to accelerate that growth. I could have gone to a bank and gotten a couple $1 million loan and used that and then just paid it back over the years and been a sole owner myself. But I want to share it out. I want to share the journey. It's something that's really cool to be a part of. So if you're interested, that's great. If you're not, honestly, it's no big deal. So just listen in and let me know if you're interested. Standard disclaimer does apply. You can pause here and read this. But there are two organizations I'll talk about. There's Ankerstar Wealth, which is the investment management firm, and then there's the AFOB, the Ankerstar Family Office Building, which is the building that's coming up. If you buy one share, you get one share of each. Right. So there's really two things that you're investing in or that you get for your investment. The other standard stuff applies. This is my projections. I determine the share price with a specific formula that I've published every month for the past 2 years. So the share price does fluctuate based on a known formula that I'll show you here in this video. So you know how I'm calculating exactly the price that I'm asking for these shares, and all the other standard stuff. Investments can and lose, will lose money, that sort of thing, down at the bottom there. Okay, here's where we are. So we're established firm now, been at it 10 years. What's our differentiator? Rapid response to client concerns. We basically, within 24 hours, get you an answer. The advisors are out there. They answer usually their clients directly, but also at the home office. If we have an advisor on vacation or whatever, we can also take that over for them. Kind of, if you think, command center style, um, stuff that floats into us, we can get answers out to folks very quickly. And of course, where we always strive to maximize returns. You can't guarantee anything in the investing world, but we've been tech heavy investors for the past 10 years, and that has totally been the place to be. And honestly, we've made some pretty significant calls over the years, and they've turned out very well for us. So we fully expect to do so. Again, no crystal ball when you're dealing with markets and world events and things like that. But so far, so good. If you're a current client, I think you're probably impressed with what you've seen. 88 million right now, 223 clients. And again, we're growing. I talked about that 30% plus average AUM growth since inception. It's ranging really 30 to 50%. 10 employees, 6 of which are client facing advisors. We do have an aggressive media presence. If you follow us on YouTube, we're putting out 2 to 3 videos a week. Mike does a recap. Mike, our chief investment officer, does a recap weekly now and sends that out to prospects. So we're really getting with it. Once we have the building, we're going to do an aggressive campaign that you'll see a little bit more here in a bit. Okay, 1.8 million facility coming up. We're going to have the keys to that in a couple months. It looks awesome already. It's kind of everything I've ever wanted for building a business, and that's one thing. And then everything I wanted in a facility to now be able to host people regularly. And I do plan on being pretty active there. So, it's kind of that join the community, if you will, give a community feel to all this instead of, kind of thinking back to the squadron mentality of back in the, military days of, sense of belonging, something you're part of something cool. So the building itself is 1.3 million, and then about 500 of equipment and furniture to go in there to make it state of the art. And I guarantee you, when you see it, you're going to be impressed. We're not missing the mark on the way we're doing things. We're paying a lot of money. We're certainly not missing the mark though. Your investment does include, that's why I put it in yellow there, is equal share ownership of Ankerstar Wealth, so wealth management firm, and the office building, which is the facility. So there's our tagline: maximizing life by maximizing wealth. It's not just about getting rich; it's making a lot of money to enable and unlock you to spend capital on things you want to do with your life, whatever that is, and everybody's different. So that's the purpose behind it all. Our continuous growth, again, is based largely on the team. I could only take it so far when it was just me. So I've been super pleased with my ability to hire superstars. I would say there's probably more luck than skill there. I just happen to know the right people and come across them and had relationships with many of them already. And it turned into a superstar lineup of aggressive folks that are looking to grow. Texas-based firm with a national presence. You can see there we have advisors, a couple here in Austin. 3 of us are here in Austin, and then Las Vegas for Joel, and then David up in Dallas and Mike in Ohio. So you see the advisors on the left and their locations. Candace holds everything together. She's the operations manager. She makes all the behind the scenes stuff work. And then Allison helps her out with that as in, during when she can. A lot during the summer full time, and then during the school year, she's able to help kind of on an as needed basis. We have cutting edge technology that we use. Have a couple of interns helping us out with specific things this summer. We're very thankful for them. And of course, there's the building there in red, again, projected for October. Might even be September. I mean, I went out there today. There's like 40 to 50 people on site working on not only our building, but there's 8 buildings in the office park, we're kind of the head building. So I like it. All right, and then we're going to that multifamily office light model in 2025, so you can have everything in one place. You have your lawyer, your estate lawyer, which you don't need a lot of, right? But you do need to get things figured out with where you're going, or if there's a major change. And then, of course, the CPA, you do need to do your taxes every year, whether you do it, whether you hire somebody. But we'll have a person in house. You're kind of have some continuity either with the person, or if your CPA is 65 right now and you're 50, they're not going to get you to the finish line, right? So you're going to have to start completely from scratch. By partnering with these firms, we're able to, do an in-house handoff right over the couple years when you know that your advisor or accountant or lawyer is going to retire, you'll have a handoff there. So again, more on that later on. Our local presence, we're aggressively going to market in the Round Rock, Cedar Park, Georgetown, Leander, basically 4 corners, if you will. The green star on the map is the office location. It's not dead center, but it's close enough to where everybody's within 20 miles or a 30-minute drive. And if you don't know where it is, if you know where New Hope is going 4 lanes all the way from the Cedar Park Center all the way to our office. So it's kind of cool. That was funded not to support the Ankerstar Wealth Office, but to support another project that didn't happen, but still the road got funded and it's all the way through. You can read the what we plan on doing there, but really think of seminars where instead of going to a steakhouse and eating steak in the in the back room and listen to a presentation, I can host and serve whatever I want in my own building to bring folks in and educate them. And if they want to sign up as clients, fantastic. This also allows us to have all our client events in-house, really have a lot more client events because we have a facility for it. So you're going to see a lot more, client service, not only to bring you in and have a conference room to sit down and talk with the team about your situation and investments and things, but also, some social stuff that is always kind of fun. We talked about the multifamily office light. You can see the words there, but look at the picture on the right in the middle. That's the floor plan. Again, we have offices on the wings. In the middle part of the building, we have a classroom area. That's kind of that short but wide area there. To be able to, talk in front of a group of people and educate them. We'll have a bunch of chairs in there. And then that box area is the in-game lounge. That's a square area, again, built out as a speakeasy. We don't have a liquor license, so we're not selling anything, but we're allowed to have, our own speakeasy there with alcohol on hand. We'll have a list of cocktails as well as mocktails because, right, it isn't about the drinking. It's about the social aspect of getting together. But it'll be a really cool place for you. I do fully anticipate to monetize the building. There are some clients already that have expressed interest in office space or conference room space of renting it that they're already paying somebody else. They might as well pay somebody that they know to be able to come in and work. So expects to see some of that. And then also with the in-game lounge. I used to do executive offsites a lot in the military where I was the facilitator leading these things. They're incredibly important for companies and beneficial for companies that choose to do them. A lot of people don't. They just go heads down and work for years and they never stop and take a breath and think about the mission and the vision and the goals and the key performance indicators. What should we be doing that we aren't? What are we doing that we shouldn't anymore? All of that stuff doesn't get thought about on a daily basis. So I think local businesses will find that attractive to either bring their entire business in if they're small or C-suite if they're big, and they have a facility that's really going to be better than anywhere else that they can go to do this. So that's what we're looking for the building. So the building itself will be making money outside of the Ankerstar Wealth or the Ankerstar Family Office type structure. Okay, terms. What does it mean for you? So overall, in the top left, you can kind of see there's, I created 100 shares. It is a Texas LLC. So you have members and there's a, operating agreement that governs this. And we're under Texas state law. Even if you don't live in Texas, you can still invest. That's fine. But you fall under the Texas state law for both the LLC, which is Ankerstar Wealth, and the LLC, which is the Ankerstar Family Office Building. There's 100,000 shares. 51,000 are retained by me, the owner. 18,000 are going out to employees. They accrue them on a certain schedule. And if they work for Ankerstar Wealth for 12 years, they will own 1% of the business for having worked here. So it's helpful when hiring pieces to let them know immediately you're going to be a partner off the bat after the first month. And then after that, your position and stake, your buy-in to this company is being reflected, every month you choose to work here and every year. So and then 31,000 shares, that's that 3.1 million, it's all based off a $10 million valuation, are reserved for purchase. Again, the first raise I did, I sent out 11,000 shares. They were purchased fairly quickly. It was about 3 or 4 month period. So 1.1 million, I brought that in. There's another 100,000 I put out now. About a third of those are gone already. And this is about the remaining float, if you will, if you follow investing terms. So put them out there for folks to invest. I am reserving 10,000 shares for board members in the future to be able to entice the right folks to come on in, or if they want to buy their way in, I have it for them. So have options for them. Purchasing options, if you're an existing member or employee and you want to add, any share amount's fine. One share would be a little bit tedious to go through the paperwork for, but hey, it's up to you. Whatever you can do. If you want to participate more, please do. If you don't, again, nothing. I literally don't care. I just want people that want to put money behind this and think it's awesome, then come on in. If you're a new member, again, it's a 500 share min, so that works out to 52,295. I suppose I should check that on my phone since I just calculated it. Yes, $52,925. And again, that can't be qualified money, so it has to either be individual money or you can use, if you have an LLC, your LLC can invest. If you're somewhat savvy, we do have folks doing that. Your trust can invest. We have one person doing that. So anyhow, if you're interested, let me know and I will tell you what you can and can't do as far as funding it, and we'll go from there. Okay, if you get up to 1,000 shares, which again is that 1% of the company, you if you choose, sit on the investment advisory board. Again, mostly the advisors run that, but we'd love to bring any partners in. They're at the 1% level. You can sit in the room. You can choose to participate fully. You can choose to skip it and not participate at all, or participate on whatever level you feel comfortable with. So we currently have 3 people, now 4 with the latest purchase that are in that role. And so far, so good. Everybody's kind of enjoyed it. So if you're interested in that, we should probably talk before you commit that level of money, because that'd be 104,950. 5,000 shares board of directors. We'd talk before you'd come on at the 500,000 level. All right. Share specifics. Again, I created these in August 2021. You saw the numbers I put out. There is a 12-month lockup period. So in other words, don't show up today, wait for, a month to make $5 and then leave. It's just a lot of paperwork. So 12 months, you need to stay on board. After that, if you change your mind, you want to sell your shares, absolutely. at any point in time, you want to take your profits, or you don't like what you see or whatever, or you need money for something else, just sell your shares. I will buy them back to you. I, being the firm, will buy the shares back. We do have cash on hand for that, if we need to. So, or you can sell shares to each other. That sort of thing is an option too. Your redemption options, there's some legalese there. Just let us know if you want to redeem shares. Only one person ever has. So we'll be able to get your money fairly quickly, usually right away. If not, have up to a full quarter to kind of make it happen. All right. You can transfer to other individuals. If you pass away, you'll have a beneficiary for these shares. So, whatever you want to do. And just let us know what the plan is there. You will sign operating agreements if you're going to be part of this, and they are visible to all members. So if you're trying to be sneaky, you can't do that. Your name will be there and your signature will be, and your membership level, like how many shares you have, will be on this document. It is technically public. If Texas made me submit it to the state, which they haven't yet. But it's certainly everybody everybody knows, right? So there's no sneakery or anything like that. All right, so the details. Excuse me. There's a formula up top. It's based on a $400 million AUM kind of formula, and we're on track for that. You can see revenues, profits, and then the multiplier, if you're into the acquisition or M&A world, is a 6 times EBOC, which stands for earnings before owner's compensation. So basically, you have earnings, you subtract out my salary, which is the big salary, right? You subtract that out, and that's what the valuation's based on. Right now, it's based on a projected 10.5 million, so that's why your shares are sitting at 105.85. Off to the left, probably the only thing you really need to see is your shares will not be diluted. For those that have known me for one day or 40 years, you know that nothing makes me angrier when CEOs and boards dilute their shares by issuing more shares. They can create money out of thin air. It's complete BS. It's exactly the same. So the other, it's like the government. When they print money, that causes problems. So we're not doing that. I will tell you from day one, I said I won't do that. And I would rather die than do that, to be honest. I will never do that. So there's only going to ever be 100,000 shares. You have your chunk of the pie. The pie's not going to grow or get more for any BS like that, right? It's just boom, it is. All right. And the details are down at the bottom. Share price, there's a lot on this slide, so I'll just talk. Left hand is our assets under management that we've had. That's a four plus year look. You can look at that and go, okay, whatever. The scorecard's probably a little more informative of what you're looking at. It's color coded. So when you think 30% a year, which is what this projection is on, and we've always done it. Well, it's hard to think in years. It's kind of like your salary, right? You don't really think in the annual salary, you think in monthly, right? Because that's your burn rate, cash flow sort of thing. So monthly, if you break 30 annually down into monthly, we're shooting for a 2.5% a month growth. That's what the share price is based on. So therefore, when you look at the scorecard, there's been 14 of 49 months that we've grown at 5% plus. Those are great months. They happen. They're not, it's not all the time, right? But 1/4 of the time, over 1/4 of the time, we're hitting a 5% bar on a monthly basis. The green bar is if we hit our goal of 2.5 up to 5%. We do that also 1/4 of the time that we meet that goal. However, sometimes we will have a month that goes by where we don't grow. We grow, but we don't make it to the 2.5 point mark, and therefore that's also 1/4 of the time that it happens. And then lastly, there are times like in April of 2024, September of 2023, and then a few times in 2022 where we actually decrease. So an entire month that goes by and we have less assets under management, generally because the market got hit or a big client, pulls out 15 or 1.5 mil to go buy a house. Those things happen. I mean, it's their money. That's what it's for. But yeah, sometimes we will face a decrease. Does happen 16% of the time. So overall, thrilled with the numbers. The shares already sold, again, of the 21,000 that are outstanding. There's 7,000 available. So you can run the math on what that is. Again, the minimum is 500 shares, or if you're an employee or current person, you can plus up anything you want. Share price history is there. So we were up at 108 for a while. April trying to hit us pretty good, down to 104. We're sitting at 105.85. I'll put this in the email when I send it out, but I will honor the June share price only till the end of June because it recalculates every month. So if we sign the paperwork before the end of June, then you get 105.85. Otherwise, you're going to get the new price. The new price, it's a market price, right? So it could be up or down. I will tell you that we are growing pretty good right now, is all I will say. So you will likely, I don't know, market may crash tomorrow, but you will likely pay more in July than you would, excuse me, in August at the end of July price. I don't know that. I mean, I obviously know exactly where we're at right now. And it's looking pretty good. That's what I would say. So expect the price to go up. Okay, quarterly distribution. So you have the share price, and we'll get into how to make money, but quarterly distributions start in 2026. You're 2 years out, excuse me, not hours, 2 years out from, getting a little bit of money in. It's not gonna be a lot of money. It's gonna be a little bit of money. So don't have crazy expectations. And then the 2.5% growth rate is basically pegged until 2029. So you've got 5 years to where it's pegged at 2.5%, and then it's not pegged to anything. You get directly the growth of the firm at that point. So expect to, make just a little bit for a couple years, then you'll get a distribution, which won't be a lot. And then 3 years later, after that, once we hit 2029, that's when you will see the significant move up in the firm. Okay, here's what things look like. So assets under management, COVID's on here somewhere. You can see it's hardly a blip. When you look at long term, the business model is so strong. Money makes money. If you're a lifelong investor, you already know that. And, smart money makes really good money. So that's our job of the team we've compiled, is to make as much as we can within your risk tolerance. Again, we've been very successful at that. I'm very proud of the team and how much, we're passionate about this, and you'll see that if you work with us. But yeah, I mean, it's growing. Even 2022, which sucked, right? It was a 20% down year in the market. It's a blip on this map, right? So we're at it every day, and we're making all this happen. So if you want to be part of it, here's the share allocation to employees. You can kind of pause this if you really care, but on the right, the first year you make one share a month, and then the second year you make 2 shares a month. So again, it kind of works its way up. Part of that is I don't really want to have to hire a whole lot. I love my team now. I understand that there will be times when somebody has to leave, for, they have to do what's right for themselves and their family. But I certainly want to make the environment very favorable for these superstars to stay. And just, being a part owner of the business is part of that. If they leave, they do have to sell their shares back, because they'll be replaced by another employee that'll start earning shares. So, an exit as an employee also is an exit as a share owner, unless they buy shares outside of their employee plan. All right, how do you make money? I got ahead of myself, but this is the slide you need to look at. Share appreciation. Again, the shares should creep up over time, but don't think, it's going to show up at 120 by the end of the year, or 150. It's not. It's just going to creep up, right? We're tied to that 2.5% flight path, if you will, so 30% growth a year. It's really at the end of the 5 years that it's going to, at that point, it will just be commensurate with the firm growth. Distributions, again, not a whole lot, but we're going to return to profitability. We're in growth phase right now. So you're either staffed for profitability or staffed for growth. Well, we're staffed for growth, and it's our job to grow out of it with the capital you're putting in. That's what it's there for. So once we get to 2026, it'll be about a $200 million firm as far as assets under management. And that's when you'll start getting, I would call it baby mailbox money. Don't get excited, just a little bit. And then, after 2029, at some point, there will either be an IPO. That's a whole nother world. I would like to do that, but there's expense, and we would have to be, at least over $1 billion before you'd even consider that, or an equity event. Somebody could come in and buy us. Again, we have to agree to that. So the best thing when somebody tries to buy you is to tell them that you're not interested and hold out. The multiples right now are crazy. These firms are like mine are hot. I mean, we're hot. People understand the business model. People understand how much we're going to grow if we're even decent at our jobs, and private equity is coming in and snapping these things up. So the pool of them to buy is getting smaller, which also helps jack up the price. So the traditional multiple has been 6 times earnings. They had firms last year going between the 20 and 30 times range. So what I'm pricing it at is probably about a third of what they're actually going to go for in the future. We don't know if that'll stay, 20 to 30, but we'll see. If the building sells, i.e. we go into the building and we grow we 10x or something in 3 years, that building's not going to be big enough and I'll have to build another one, right? Or buy one or move or whatever. If the building ever sells, you get your fraction of the building, right? Those are basically free shares. You're buying shares of Ankerstar Wealth, the capital's going in there, you get the building for free. And why do I have it structured that way? So I can move capital from Ankerstar Wealth over to the building as necessary, back and forth. So the Ankerstar Wealth is going to be the primary tenant of the building, and they're both LLCs. So if somebody slips on the sidewalk in the snow that we never get, and wants to sue, they can sue the building, right? They can't sue the entire Ankerstar Wealth firm, right? Because it's legally protected. So that's why it's set up that way. Here's the distribution. If the company makes $2,000, distribution per share would be 2 cents, right? So you're not getting a lot until we get really, really profitable. So again, we're growth phase. We will be profitable in 2026. I have levers I can pull to make sure of that, which is my salary. We're just reduce it until we're profitable, but which I don't want to do, right? But we'll manage that. That's my job to manage that appropriately for both organizations, if you will. So you can pause and read more if you want. Okay, investment risk. First of all, Steve, for some reason, predeceases the 2029 timeframe. We do have a plan in place for that. Mike he's currently the CIO. We only have 2 of us on the C-suite as we're drawn up right now. He would take over as the boss. All else would be normal. I do have a $2 million insurance policy that the company has purchased on me to go for funds to the company. Should that happen, the shares that I have will transition, the unallocated shares that are out there, the extra employee shares, all that will transition to Mike. The unpurchased investor shares, which we're talking about for you guys, that transitions to Mike. My family, who currently has 51% of the shares, will reduce that by 50,000 shares just to get out of Ankerstar control. And that'll be for Irene and the girls to decide. But again, at that point, if I'm not around, they don't have 51% control of the organization. So the organization can continue to grow from there. So risk number 2, company does not grow in accordance with the projected schedule. That means the stock price will not stay at 105.85 that you're buying at right now. It'll fluctuate up and down. If we don't make our growth rates, it'll fluctuate down. What I will say is it's kind of, I don't want to be presumptuous or arrogant, but even if we don't make the magic August 2029 date, say we make it in December of 2029, the same math applies, right? So, I mean, we're going to hit that mark where the company's worth 10 million, whether I make it right on exactly on the date that I projected at, or, hopefully a little earlier, a lot earlier, right? If things go well, but even if I miss, it's going to happen. It's just when, right? So, and we're not going to sell before it's worth the full value. And then we want to hold it as long as possible after that. We'll see. There may be a day where I'm not the boss anymore and somebody else is, and I go to a chairman role. I mean, we've got all kinds of maturing that we need to do. And that's at the bottom. So hopefully we stay private and continue to grow. That would be preferred. If everybody says, if everybody's cool with us selling and taking whatever profits we have at the time, then we'll talk about that a lot and then float out. But if you want out, you can sell your, you can sell your shares at any point in time. The building is what it is. So when it sells, you get a chunk of the building. Okay, why invest? First of all, is math. We talked about the 6 multiplier I'm using. Current multiples are 20 to 30. I'm not going to revalue my business off of the multiples of this past year. I said 6 2 years ago, or in August of 2021, 3 years ago, I guess. I set it at 6. I'm not changing the formula. I'm just saying the paydays right now are 3+ times 3 to 5 times what I set the valuation at. Okay, so math. If you follow that math, you'll be like, this is a pretty good place to invest some money. And then I call it the 1, 2, 4. So you have to understand the math. You don't have to understand the math. You have to believe what I'm saying is the truth, and it is the truth. The second, you have to have 2 convictions. You have to have conviction in the financial services industry. If you think AI is going to invalidate what professional investors do and the relationships that we have with clients and stuff, then you would not want to put money behind a financial services firm if you think AI's got it. I will say the comparison that I make is, we still have doctors, 2 decades after WebMD came out, and I don't think the doctors feel threatened. So I don't either. These things are very complex. They're personal relationships, and you're looking for a person. If you're a client, you're looking for a person to partner with that will help you successfully navigate a very confusing, complex field. One, to avoid mistakes, and then B, make you as much money as we can. Next conviction, you have to have the conviction in me, not just the team, but in me personally, the vision that I have for the company and that combined strategic plan. If you're hearing that and going, that's crazy talk, don't invest. If you're hearing that going, well, that's crazy talk, but I've heard Steve also say things like when he was 20 years old and he said he was going to be a fighter pilot in the Air Force and, fly fighters for his whole career. People laughed then. Don't care. Towards the end of my career, I stepped away from command, had a year left, went overseas and Googled how to start an investment firm. People laughed at me then. They're like, why would you even do that? That's impossible. Yeah, possible has now become possible and has happened. You do have to believe what I'm saying. If you don't believe what I'm saying, do not invest. And then the 5 beliefs, excuse me, it's 5, not 4. Current and future team. So as you meet the team, assess them and their capabilities, they're superstars. We're not like a New York City, big city firm, which is largely a lot of attitude, arrogance. We're smart, you're dumb. The team I've assembled is here to help you. And if we don't know, we will say we don't know. Right. But then we'll say, we'll get back to you. Right. So, and then it's our job to figure it out. So a very different experience. This is a true partnership experience. Belief in the business plan that we can achieve 30% year-over-year growth. That gets more difficult as numbers go up. But I will say in the market, if the market makes 12%, it's not 12% of a small number, it's 12% of any number. So the percentages track, and that's why you get that exponential growth. If you understand time value of money, you'll go, yep, I got it. Belief in the building to monetize itself. We're making a state-of-art building. We have to, if you build it, they will come. If you think we're going to build it and nobody shows up, yeah, that would not be, I would not invest then if you don't think anybody's going to come in. Ability to generate profits and therefore distributions. That's kind of up to the management team, which is really kind of me pulling that lever right now. We'll expand that out. But yeah, we're going to do what it takes to get profitable, and then belief in the leadership at the end to navigate, maximize your value. That's a different skill set from running the company. Being an advisor is one skill set, running the company is another skill set, and then selling the company is another skill set. The good news is every time I go to a conference, I sit and listen to the M&A briefs. They say, and across the board, they say, if you are even thinking of selling, you need to start 3 to 5 years out. So I'm already listening. I have no intent to sell for 10 plus years, right? But I'm paying attention now so I can grow into that role later on. If I feel uncomfortable with it, I'll hire somebody onto my board that's an M&A expert and say, make us all the most money. That's why you're here. And then that person can succeed in that role. And then there's also the why not wait? It's just like, well, if I'm not getting much on my shares for the next couple of years and I'm not getting much distributions, I'll just buy these in 2029. Okay, they won't be there. The window is going to likely close this year. Whether folks buy the rest of the shares now or not, I mean, it is 700,000 that's out there available, which is a lot of money, but it's kind of not too if somebody swoops in. But when they're gone, there's not more shares. You have to buy them from somebody else at that point. And honestly, these are going to be diamond hand kind of things where you're not going to sell your shares. I already know that. Yeah, you're not going to be able to get in later. So you're kind of getting in early, waiting for the plan to happen. Right. So consider how big could it get? This is kind of that dreamy type slide. So there's some terms on here. MOIC is multiple of invested capital. So if you put in 100,000, because that's an easy math number, then a 2 by MOIC would be 200,000. Right. So 2029, I told you everything's pegged for 5 years out to a $10 million valuation. So if you watch Shark Tank, yes, you're getting the 2029 value of the firm, but you're buying it now to lock in your spot. And that's based off of 30% year-over-year growth. So assuming we get to that point at 2029, if I continue growing at 30%, our money is going to double, every 2.5 years, right? If 24% is what I have, two scenarios here. If we miss our mark and only grow at 24%, and again, the market's already up over 24% this year, not saying that's every year, but 24% growth, you double every 3 years. That's the rule of 72. So then by 2032, we're worth 20 million, 2035, we're worth 40 million, 2038, we're worth 80 million, 2041, we're worth 160 million. And you're like, I don't care what the company's worth. I care what my shares are worth. So whatever you put in, say you put in 100,000, then you could in 2040 be looking at 1.6 mil, right? And you can run your own math with whatever you decide to put in there. if we really miss the mark, and markets grow 10 to 12% a year, and commercial real estate, which we're starting to pile into, is paying 14% a year. So even if we're what I would call not very successful at 18% a year growth, forever. And that would be, I would feel like I have failed you at that point. But even if I have failed you with an 18% type number, that means rule 72, your money doubles every 4 years. So now we're just waiting to 2045 for that 160 million mark. And that's not a magic number. I'm just saying this is what the math works out to be. And all that is caveated with the bottom line there is next year I can turn around and buy another firm. We're going to be big enough. We're going through SEC registration. We'll be $100 million assets under management firm. I could turn around and buy another player, 40, 50, and tuck them in is the term, like that, and pay them out, pay them their money. Maybe they put it, maybe they hop on our board and I gift them some shares. Won't, these are existing shares, so you're not diluted at all. But I've got options. I've got levers I can pull. I can go to the bank and get a loan for something like that. But basically, if I can, this is all organic growth. So growing from within, current clients, new clients, not just buying out an advisor. The average age of an advisor is around, I think it's 60 something. I haven't heard it this week. I'm young. I'm not young. I'm 54, but I'm young in relation to the average, right? So people are retiring left and right. They're looking to sell their books. I'm not buying right now, but once I get through SEC registration, once I get the building open, once we go into surge mode, middle of next year, I now have that capability to get into that mode. I'm also partnered with a firm called Advisor Stack. I'm also, full disclosure, an equity owner in that firm as well. And they do this sort of thing. So I do anticipate being a beneficiary of some of the folks that are helping transition to have other people buy them to me / our firm being the buyer. That's not even calculated in here at all. So, and maybe it doesn't happen, but it's certainly something I'm be looking forward doing in the future. Okay, got long-winded. Bottom line, in some, you have an opportunity, that part of this is to be part of something special. It really is. I'm sharing this journey with you. If you think that's cool, that should be enough alone to invest. If you're trying to be like, if you want to call me every day and ask like whatever, it's like, it's not that kind of relationship. It's like, we want to put something special out there. We've done that already. We've built a special team and we love our clients and we're going to continue to grow. If you want to be part of that journey, come on out. If not, just watch from the sidelines. That's fine. It's in an industry of proven growth, financial services. When you look at all the, Forbes richest people, half of them are financial services. So I don't see that changing. Never know. But anyhow, it's a proven industry. I'm a combat proven leader with a track record of proven performance. I've said some bold things in my life and largely made most of them happen. Certainly the big goals. So if you believe in me, then that'd be another reason to hop on board. And then position to earn long-term returns in excess of traditional markets. So if you think of that 10 to 12%, and you're like, Steve, how do I get more? Well, commercial real estate, we talked about 14%, private equity, you're around that, lock it in that 10% or so. With this, I mean, once you get past 2029, you're looking at some crazy numbers, right? So if you're a long-term investor and have some diamond hands and want to go on the journey, the number and email are below, just reach out. That's the formal process. If you are interested, reach out to me somehow and say, hey, I either have questions or I'm in based off of what I heard, and we go from there. When the shares are gone, they're gone. So anyhow, hope you enjoyed the presentation, learning more about Ankerstar Wealth. And again, we're here if you're interested in becoming a partner with us. With that, have a good one, and we'll talk to you later. Bye.